So Ranveer, yeah, I'm a man of few words, so I won't spend much time. I have been working on IPO Central for over a decade now, and I have been in the markets for over a couple of decades. Uh, इसके साथ में मुझे भूतपूर्व सेबी रजिस्टर्ड रिसर्च एनालिस्ट होने का भी गौरव प्राप्त है. सो काफी इंटरेस्टिंग बिजनेस है. मैंने थोड़ा सा स्टडी किया. आई लाइक्ड इट वेरी मच. And so I have just a few questions. One is going to be about your history. I could make out that you initially started as a fintech company, or largely a loan originator company, and then you are taking more and more loans on your own books now, right? तो ये जो एवोल्यूशन है इसके बारे में थोड़ा थोड़ा बताएं कि कैसे हुआ.
Sure, sure. So, Anil, first of all, thanks for all the generous words, and really a pleasure to talk to you. And thanks a lot for covering us.
Thank you.
Just a quick introduction of myself. I'm Ranveer Singh, as Athira mentioned. I'm the founder and CEO of Kissht. On your question, we are a lending fintech company, which basically means that we use technology to enable loans. As I speak, I have served 11.2 million customers. All of these customers have gone through a digital journey. Barely any of these customers we have met. So it's a fully end-to-end technology digital platform that we have created. And what we have created in the Indian market is this platform where the customer can come in, they go through a journey. During the journey, we collect a lot of information like bureau, like banking, like if you are a salaried customers, like provident fund data, Udyam certificate for self-employed. Basically, lots and lots of data which allows us to assess the risk of the customer. And on the back of that, we are able to immediately give an approval to a customer, to a creditworthy customer. And the entire journey takes less than 10 minutes, where one is able to disburse the loan. For a new customer, for a repeat customer, it is further lesser. And because we have been able to create this convenience proposition, which makes the whole lending process very dignified in nature, where you come to the app, go through the journey, and get the money transferred in an account, we have been able to acquire a very large base of customers. To your specific question, we started as loan origination and then got into funding from our own book. The history is as follows. Almost the time when we started, we also started the NBFC. So the company structure is as follows. The holding company is called OnEMI Technologies. It has a subsidiary, which is 100% subsidiary, which is an NBFC. Today, when I give loan, 50% of the loan are given by my NBFC. The 50% of the loan is given in partnership with other lending partners. While working with them, I give them a risk guarantee, but the entire experience of the customer, the ownership, the collections, the servicing, everything is managed by me. The reason I did this almost at the time when we started the company, because we have a strong belief that if you have to create value as far as lending in India is concerned, which is a very, very massive market, and as the RHP mentions, any industry estimate, it is growing phenomenally. It is expected to grow at a very, very high rate, which is what the industry expert have mentioned. We strongly believe that you should be able to put your own balance sheet at while serving the customer. The pure vanilla loan origination has some limitations. So right from day one, almost around the same time, we started our NBFC also, which was in addition to working with our own partners, was being used to provide balance sheet for the lending.
Okay. All right. So, like you very correctly mentioned that there are some limitations. I guess there are many limitations being purely a fintech company and not owning what you're selling. So, yeah, then basically the company is largely reduced to a commission-based player. But then it also introduces many risks. So, one of the major risks I see with your business model is that is related to the recovery of the loans. You have totally virtual relationship with your customers, isn't it? Right. So how do you ensure that the customers pay back?
Absolutely. First of all, you mentioned it very correctly that we never meet the customer in person, but that is also
Mm-hmm.
the reason we have been able to create this proposition where people who want hassle-free loan, who are high credit-worthy customers, they come to our platform. Uh, the core thing in any lending business is being able to underwrite the customer, underwrite a good quality customers who are basically going to give loan. Now, just to before I come to recovery, which of course helps in the collection of loan, but more importantly, right at the time when I'm underwriting a customer, being able to assess a lot of data, particularly bureau data, transaction related data in the bank statement to be able to figure out what are the other very, very important proxies or surrogates like their e-commerce purchases, like, the other things, for example, whether they have invested in assets like FD or mutual fund and things like that. Basically, whole host of parameters which establishes a very, very strong capability to pay back the loan. That becomes the crux of our underwriting, which safeguards against any, potential risk of customer not paying. Usually in
Mm-hmm.
India, what happens is if you are able to identify those customers who have the real capability to pay, people do tend to pay back and you don't have to put those recovery effort. In fact, in our customer, I mean, just to give you a flavor of these customers, almost 52% of these customers are self-employed, 48% are salaried. They are
Mm-hmm.
largely, young people. So 32 years becomes the average age of the customer. Uh, there is a very strong emphasis not only on income, but the sustainability of income, plus the digital savviness. So if you combine these two factors, you will find most of the customers are in urban India. So the top 50 centers contribute to almost 63%, top 100 centers almost contribute to much higher share. So the simple point being, at the time of underwriting, because we are able to collect so much of data, which goes into our ML models, machine learning models, and more recently in the last 2.5 years, the transformer model, which is the AI-based model, it is allowing us to decipher a good customer versus a not so good customer. Not so good customer defined as where the credit worthiness is not so high. And that is one reason why we have been able to grow at such a phenomenal rate. If you see our growth rate, even in the last, many, many years, there's not a single year where we have grown less than 55%. Particularly in the last 9 months, the growth has been almost 75% plus. Having said that, in addition to this, we also have to put, collection effort, which you are alluding to, because for a small portion of the customer, there is always an element of, they could not pay at the time the loan payment was due. And the collection effort requires a combination of technology related measures, which is calling over phone, AI based or IVR calling versus telecalling versus field collection and whole host of other measures which are taken. So the combination of all this business model that you put, which allows us to really go after and serve the customers in a right way. The only other thing I would say is we have a sizable portion of our customers who are repeat customers also. And these repeat customers usually are at a much high quality because we have seen their payment track record over many, many years. And then they come to us. So that's the other factor which helps us really, really identify a good credit-worthy customer right at the time of sourcing. Last but not the least, I should also mention 100% of my customer who I take, I also take a auto debit mandate. So I have the option of, on the due date, uh, hitting their bank account and being able to withdraw the amount which is due from an EMI standpoint. So there are a whole host of these measures which contribute towards managing the risk that we are talking about.
Okay. Fair enough. You just mentioned that your models are able to not just identify the current status or current status of the customer in terms of their loan repayment capabilities, but you are also able to identify the longevity of their repayment capacity. I'm not really sure how it fits well with a self-employed person. uh, Whenever I mean, how do we ensure, how do we not ensure, but how do we make sure that this customer remains employed, self-employed for the entire length of the loan duration? I guess, and these are unsecured loans we are talking about, right?
Yes,
What's the
absolutely.
average tenure of these loans?
So the average tenure of the loan is 13.4 months, uh,
Okay.
which is the contractual tenure.
Mm-hmm.
Very important question, Anil. Let me just lay out what goes in, assessing the longevity. How do I get confidence, particularly in the case of, self-employed customers? See, just to give you a flavor of when I underwrite a self-employed customers, I look at parameters 3 years back, so almost three times of the contractual tenure that I'm giving,
Mm-hmm.
where I look at what has been their track record in bureau. Have they ever defaulted or not? What
Mm-hmm.
is the banking cash flow, whether the transactions have been solid, or is it a very seasonal business the self-employed customer may be in. Of course, if somebody is running, even if they have a very high income but they are running with very high degree of seasonality, I'm unable to underwrite them, I'm unable to approve them. But at the same time, for us, selection of customers who basically have shown sustainability of income, and not only sustainability of income, sustainability of track record in paying their existing loan becomes a very important criteria, almost a filtering criteria for me to decide whether I should accept the customer or not.
Mm-hmm.
Beyond those filtering criteria, there are a whole host of other variables. These are surrogates and proxies, but a very, very strong surrogates and proxies. Just to give you an example, for example, one measure of self-employed for a customer, a measure of self-employed customer's creditworthiness is that there is a address stability. The person has not moved from one place to another. From bureau, you are able to get those information, how many addresses which are appearing. Uh, Not only that, we also look at has there been any evidence of over leverage building up over last many years, so that if the customer is taking money out of stress or out of a normal time, and there are scores assigned on that. It's a highly sophisticated statistical model. I know words like machine learning is used very very. I mean, they have got cheapened with over usage, but it's a very sophisticated model. We are one of the. I mean, we started this. We have been doing this for last 7 8 years. So some of these models have seen many many customers. As I said, 11 odd million customers, and out of which 50% almost are self-employed. So it's not only these variables, but more importantly, the confidence and the conviction on whether these variables are strong variables in predicting the risk becomes a very important part of our underwriting. I think at one level, what we are able to decipher is a self-employed customer who has a very sinusoidal cash flows versus a self-employed who has a very stable cash flows. Of course, all self-employed goes through a little bit of vagaries of, go through the vagaries
Right.
in the market. But because we could use this data, could use this ML and AI model and can provide a journey which allows us to collect that information, particularly for self-employed, we have been able to underwrite customers who we believe are high quality and creditworthy customers.
Okay. All right. I'm just reading up about your company. Maintaining a 97% collection efficiency requires a high intensity operational setup. You have more than over 8,000 agents on the field. Uh, any geographical spread, geographical uh, area that you prefer, or how are they distributed?
Absolutely. So first of all, I have a large collection force, and just to draw the contrast, on the sales side, I don't have many salespeople at all. In fact, there
Mhm.
was a time when there was zero salespeople, but at the same time, on collection, I have 8,000 people, because we are a believer that at the end of the day, you need a very strong collection systems in place. Now,
Mhm.
there is no way you can manage this till the time these are technology enabled. What I mean by that is we have what is called as an automated collection system, which has many,
Mhm.
many modules. We have built this over last 7 8 years. It has an allocation engine. It has a business rule engine. It has, skip tracing engine. It has campaign management, etc., etc. This is all geared towards people who don't pay on due date. What would be the best intervention to achieve this high degree of collection efficiency number that you mentioned?
Mm-hmm.
And that plays a very important role in our entire this thing. Sorry, Anil, I missed the question. What was the question you asked?
So I was just interested in knowing if there is any geographical preference in terms
On
of
the geographical
states or
preference.
cities.
Exactly. So on the geographical preference, see, as I mentioned, more than state concentration, we have a concentration on the urban part of India,
Mm-hmm.
and my customer base almost reflects the urban population, which is split across south, east, west, and north. But almost 60% of the opportunity for me comes from west and south, while 40% comes from east and north. This is at one level quite representative, again, as I said, of the urban population of India.
Mm-hmm.
And then that's what we, again, just to reiterate, why urban population? Because there is a very high degree of focus on sustainability of income more than just the income, plus the digital savviness of the customer. If you combine these two factors, you will primarily find people mostly in urban India or the periphery of urban India, not so much on semi-urban and rural. With every passing day, perhaps the semi-urban opportunity is becoming big, but as we speak, urban opportunity is the biggest from that standpoint.
So you are currently focused on the urban economy,
Yeah,
right?
90% plus is from the urban.
Is it that the availability of your field agents in a particular geography plays a role in your loan disbursement decision? So let's say if I am I need loan and I approach you, your company, but I come from an area where you don't really have a physical presence, no recovery agents, in simple words. But I have, and I'm also in the rural part, uh, and my books are good. Would you still decline me as a customer, or you would accept me?
So the factor which plays the most important role
Mm-hmm.
is you have had a steady income, and if you have taken a loan, you have shown a track record of never defaulting on your loan. Those are important parameters. Now,
Mm-hmm.
if that type of profile exists in beyond urban centers, we cater to them also. But our experience of running this business is the proportion of those customers are very few. Uh, it is mostly the urban India where we see a sustainability of income. The moment you get to rural India, you find the income levels more sinusoidal. As far as whether there is a correlation of the collection agents and the business where we do, see, when you have 11 odd million customers, you have almost covering a large part of the pin codes in India. Uh,
Mm-hmm.
so of the 19,000 plus pin code, we are almost covering, a very large part. So that becomes more a post facto thing, not at the time when we are underwriting the customer.
Okay, got it. But still, I'm sure you would agree, field agents are very important, especially when it comes to recovery or collection. Uh,
Yes, yes. So the way it happens
because
is,
I think this loan disbursement business is one of the simplest businesses in terms of disbursements. You can give loans to each one and everyone. It's but the real crux of this business is in the underwriting part and the eventual collections.
correct.
So सो वहां पे आप कितना एग्रेसिव होते हैं कलेक्शंस में the social media is replete with all these examples of recovery agents doing their own tactics to make
Yeah,
sure that the customer pays back. Yeah.
absolutely. Let me see, you rightly pointed out, but let me just make a distinction very clear. Lending business can be easy, can be difficult, but the most difficult part is to underwrite the customer. If you
Hmm.
don't underwrite the customer, there can be the risk can even not be managed by any level of collection. And on the underwriting, there are two aspects which becomes important, which we have mentioned obviously. One is, of course, to establish what is the capability of a customer to pay. If the capability is not there, there's no way the customer can produce money out of somewhere. And the second part that one has to take care is that you are not dealing with a fraud customer, right? In a world where there are any and every kind of fraud which happens on the UPI or otherwise, all kind of technology related fraud, there is a very very comprehensive system that one has built only to address those underwriting related thing and the fraud related thing right at the source. Now,
Mhm.
having said that, on the collection aggressive practices, I can tell you there are no aggressive practices which are pursued, and the reason for that beyond the practice that we followed, there is a myth which exists in Indian market that collection is all about knocking on the door and showing aggression. Absolutely not. Of course, there are some noises in social media, but the simple point is, sorry guys, just one sec. Yeah. So the simple point is, RBI has outlined very, very clear, lucid guidelines
Mhm.
on what is this is called FPC Fair Practice Code in terms of how you have to engage the customer. These has things like when you can do it, what time is accepted versus not, what are the medium that you can use it. And we being a responsible NBFC plus a fintech company who is creating an example for others also, we follow a very high degree of compliance and adherence to the guidelines laid out by RBI. So it is
Mhm.
actually not true at all that people follow aggressive practices. The reality of India is that if you just go and meet the customer and there is a knock on the door, people pay. A large majority, not all. And the ones who
Mhm.
are very recalcitrant for whatever reason, right? They've gotten into bad situation, etc., etc. They of course struggle to pay, and that becomes the losses. What you see in the book.
Okay. Right. So coming to that, your gross NPAs have increased dramatically in the last 3 financial years, and I think I can very clearly see why it happened this way, because more and more number of the loans are residing on your books now, as compared to 2023 or before. So from 0.05, now the ratio has increased to 2.9%. That I'm talking about gross NPA. So
Let
now
me
this
just
is part
explain.
of the business, right? We understand this is part of the business, but isn't
There's
this
one more
figure
reason.
too high? Yeah,
There's one
please.
more reason which has contributed to this. First of all,
Hmm.
if you see the gross NPA between FY 2025 and 9-month FY 26, it has remained constant.
Hmm.
The other big reason which has contributed, other than the fact that I'm using my book, even then I was using a significant portion of the book, is I have a write-off policy earlier then, which was to write off the loan at 90 DPD. So when you write off the loan at 90 DPD, there was hardly any loan which was going into gross NPA, and that's
Hmm.
why the number is very closer to zero. I run with a write-off policy of 150 DPD, and one of the other thing which we have mentioned, despite that, if you look at my gross NPA and compare it with some of the other institutions in the market, the competition, the peer group that we have mentioned, it continues to be very, very competitive number. So it's more of the accounting write-off policy which has contributed, because the gross NPA is between 90 DPD to 150 DPD. Not only that, the other
Hmm.
important thing to keep in mind is I also run, just so that I follow a degree of prudence, and I put a decent coverage, a decent provision on that. You must have seen my provision numbers against our provision coverage ratio. Basically, provision coverage ratio is around 86%. So for whatever small amount I have on gross NPA, I ended up providing fully for that. So my net NPA becomes 0.38%, which again, if you compare it with the competitive peer that we have shown, becomes a very, very, you know, what I understand, the best in class number.
Hmm. All right. Also, you have your company has recently forayed into loan against property, right? Although still a very large portion, almost overwhelmingly large portion of your AUM remains unsecured loans. Uh, and this is unlikely to change materially in the coming years. Or you want to really, go out and undertake everything, whatever it takes, but I would really want to get into LAP. Uh, yeah. So please
What is
give
the
us a
thinking behind it?
picture of the next 5 years, how you want to shape it up.
Sure. So Anil, as you know, I may not be able to give any forward-looking view, but let me tell you about the lab business. Why did we start, and what is the rationale, and why we feel so excited about this business?
Mm-hmm.
It was started almost 2 years back. 9 months back, which is FY25, the share of LAP was 2.2 to 2.4%. That
Mm-hmm.
number in a short span has moved to 5.8 odd percent in a very short span, which is 9 months, despite the fact that my loan book has grown an annual rate of 70%. We feel very, very excited about this business. We have already got 82 branches in LAP. The rationale for starting LAP is as follows. Um, First and foremost, it helps in diversifying the book, not only on the secured and unsecured, but also the tenures are higher there. In my PL book, it is 13.4 months. In my lab book, it goes between 5 to 7 years. That is one. Second, more importantly, see, I have given some examples in my RHP for institutions like Nubank, which is a Brazilian institution, which basically did unsecured loan for the longest period, and then they cross-sell many products. See, one of the value for me beyond the financials and other is the large base of customers I carry, and this large base of customers have multiple other product needs. LAP is the first product that I have started. I will add many more in the spirit of diversifying the book. And in a short span, as you know, literally in the 9 months, it has gone to 2.2 to 5.8, despite my overall book growing at a very, very high rate. So the point being that we want to cater to the customers with multiple set of products. LAP is the first one. As we
Mm-hmm.
try seeking a leadership position in the segment that we operate in, which is the lower end of the mass affluent and the mass market segment, we'll add more products. And we feel very excited. In a short span, we have been able to. So a sizable portion of my customer on the LAP comes basically from my unsecured PL customer, which also acts as a funnel, which is basically saying nothing but, this is a similar strategy many other institutions have followed and have become one of the largest in India, which is to acquire customers from one hook product and then being able to cross sell other products.
Right. So is it the same? Do you see any overlap in these customers, or these are mutually exclusive sets?
No, so I've mentioned that in the RSP, 38% of my lab customers comes from my unsecured PL customer. So it acts as a steady flow. And
Mhm.
as you know, 38% is a significant number because it helps the economics of LAP in a big way. For those 38%, I don't have to go out and acquire customers because it just act as a funnel. And that is what I was talking about, the power of 11.2 million customers that I currently have.
Mhm. All right. So yeah, what does it really take to because you don't interact with your customers at the time of giving loans. They originate online or through some medium, through your partnerships with small business owners, maybe shopkeepers, or the touch points, largely speaking. What does it really take for a competitor to disrupt your business model?
Yeah, so uh, first of all, very difficult for me to talk about the capabilities a competitor can bring, because at the end of the day, when we say that a customer is, we never meet the customer, goes through a digital journey in a short span, is able to take a loan and not only take some sanction on approval, the money gets into the account. Let me lay out some of the capabilities which becomes important.
Mhm.
And those capabilities are the one which keeps us in such great position. First and foremost, I have already emphasized the capability around underwriting, a lot of data, machine learning, which gets used. And not only these machine learnings they are not static models. They are models which have a nature of self-correcting themselves. If you see any minor, major risk, it immediately flags, and the tweaking which happens in the model one is able to pursue. That is one part. But more importantly, it also means creating a journey for a customer that is completely digital. See, at the end of the day, these loans are regulatory. The whole business of giving loan is regulatory. It comes under the regulatory purview, which basically involves that there are a set of things which I'm doing. For example, I have to complete the KYC, which is an accepted KYC norm. I have
Mhm.
to collect lots of information which allows me to know the sustainability of the customer to pay back the loan. In addition to that, there are many, many more things. If you do my journey, you will realize I have added, which are not even required from the regulator, but I have added a extra comfort, which is only to ensure that there is some. So, for example, the customer will do a liveliness index by taking a selfie for a few
Mhm.
seconds. It will
Mhm.
do a bunch of there is a whole host of 200 plus variables which are only assessing if there are any fraud related thing or not, and you have to do it during the course of that 6 to 7 minutes or the 10 minutes depending upon the type of the customer. Basically being able to create that journey, being able to create those 400 odd variable which will be assessing the underwriting part plus also assessing the fraud part becomes the cardinal thing in this.
But then, isn't it, Ranveer? I'm sorry to interrupt you, but isn't it that players like Bajaj Finance or the established NBFC players, let me put it specific name to it, like most of the established NBFC players, what's exactly stopping them from doing it? They have a lot of data. They can also put machine learning or AI algos on top of all this information. I think they have plethora of information. More than I don't know how many variables they can create out of these the data they already have. So what exactly is stopping them? Is it the nimbleness, or there is something else that we are missing?
Yeah. So, no, you're right, asking a very important question, Anil. See, the question to ask here is, first of all, it will be very difficult for me to comment on one individual player, but I got the sense of the other player who have more capital and more whatever data point or some data point
Exactly.
which can help them. See, it is very, very different. The reason it is very different is because the first thing to ask is why people have not done it if they had. The reason being, many times, there is a safe refuge people find in the business model that they are pursuing. We are one of the early, not adopters, or rather pioneers in building the machine learning model, which becomes the basis for some of these underwriting. There
Mhm.
is an element of flexibility and nimbleness that we are able to pursue because it is very, very tech oriented thing. It is not only important for us to give the loan, but there are a lot of back-end activities which happens where there is a loan origination system, there's a loan management, the loan gets produced, and then there's a whole set of business model elements, which basically means having a schedule, follow up on the loan, recovery, talking all each other. These
Mhm.
are capabilities which takes years to build. They don't come immediately. But more than that, the biggest reason for this is, see, at the end of the day, risk calculation or underwriting is not in isolation, is ever done in isolation. These are things which are done for the segment that you are catering to. So the segment, the way I was describing, for me, the customer segments have income level between 25,000 per month to 1 lakh per month. There are a small portion who have more than 1 lakh also.
Mhm.
There are people who have decent civil score. So I think for people like us, what we have been able to demonstrate by having such high growth rate, plus also doing it in a value creating manner, is for the segment, I have been able to create this business model. And this segment, as you know, is a very, very large segment. Not only it is a large segment, but with every passing day, this segment is moving towards digital savviness. People are expecting the services to be given digital. People do make a big difference in terms of saying, I getting a loan. There's a world of difference between somebody getting the loan in, say, 10 minutes versus somebody getting the loan in 24 hours. Um, of course, the convenience and the process is far more, superior here. But from a customer standpoint, it just makes a very, very different level of experience. So those are the elements, which is to customer journey, underwriting, which is
Mhm.
not in isolation, it is more segment linked, and all the elements of the business model, which basically involves attracting the customer, serving them through the journey, doing also the collection, and putting all those pieces together. Even if you have data, even if you have whatever the capital, it is not easy to replicate. It may take many, many years to replicate. That is the reason why we don't see some of the big players, coming on this foreground.
All right, fair enough. Let's move to the pricing of the IPO. And I present to you some data points. Uh, so NBFC sector has been fortunate that way. Is a lot many companies have from this segment have tapped the primary markets, and so except iFinance, which got listed recently, I don't really see many names. I'll give you some names. Tata Capital listed at marginal gains. It's still at the same levels. Lakshmi India Finance listed 15% down. It is currently 27% down. HDB Financial listed at 13% gains. It is now down 9%. Manba Finance listed it with gains of 26%, but it is currently down 7% from its IPO price. Same with Northern Arc, 23% gains, and it is almost at the IPO price right now. Now, I'm not saying that your company is bound to go follow the same path, but is it that you looked at the past performance of your peers and then you decided that uh, let's price it reasonably? Because I have to give it to you, because we were hearing lot many some price figures going around, and going by the levels at which the company raised funding earlier, and also the allotments you made to Sachin Tendulkar and the likes, and you yourself, you put in some money some time back in the company at different levels, and now the IPO is coming at somewhat marked down price. So I don't know really what to make out of it. Maybe you can help me in this.
Yeah, so two, three things I would say. So first of all, Anil, I'll see this as a very, very positive thing. The
Mm-hmm.
fact that promoter is putting money and not some sometime some other era in sometime in the distant past. It is a very, very remote, very recent past at a price which is higher. It just shows the degree of confidence and the conviction. So I first of all see this as a positive thing. As far as the set of example that you were talking about on they coming in and they went going up and then going down. See, at the end of the day, Anil, you know it. This is those things. There are many counter examples also where the prices have gone up significantly, many. It depends upon what is the entry point.
Mm-hmm.
There are many matrices which gets used. These are ratios which get used. So it's a function of what is the entry point. And I think the entry point that we are coming up with is, I wish I could say I had any big role to play. It is basically a lot of credible investors who it is more a price discovery than me putting the thing. And at this price discovery, there is a decent demand, and that is what is driving the price. The same examples as you said, if they have come at X% lower or Y% higher, the situation would have been plus minus could be different as well.
Mm.
So I
Yeah.
would say, so that's more a function of what is the entry point. But more importantly, I see this as a big vote of confidence, at least for people who are coming, that promoters have put a decent amount. It's not a small amount, as you know, almost 40 odd crore
Yeah.
at a price which is almost 15% higher, uh, if not higher, and that too happening literally very recently, a month back. So I would see this as a very extremely positive sign of support for the company.
Yeah, of course, your pricing, absolutely no doubts about the pricing. Mostly, promoters and even merchant bankers play a big role in this. So, but then the pricing tends to be on the higher side. Your pricing is very good, but I was just trying to understand if this is a preemptive move that you have made regarding the price. You try to influence the price at which the merchant bankers suggested. How exactly things went around in that? So yeah.
It is no preemptive mode, absolutely no preemptive mode. It is just the availability of what was available for me to buy then, and the confidence we have on being able to be certain, and basically our conviction on the business.
Got it. Got it. All right, I'm through with my set of questions, Ranveer. It was absolutely pleasure talking to you. Wonderful discussing these things with you, and I really appreciate the clarity and the honesty with which you replied, answered all the questions. Thanks a lot once again for taking out time and talking to IPO Central. I wish you all the best for the success of the IPO.
Anil, thank you once again for all the kind words. Really appreciate it. And thank you for being very articulate with a set of questions and a probing set of questions which you asked. Thanks a lot for that. Really appreciate it.
Thank you.